What's going on, everybody? Mando Trading here on September 23rd. In today's video, I kind of want to just talk a little bit about discipline. Discipline in trading has so many layers to it, and depending on how far along you are in your trading, the lack of discipline can really have a different type of effect on you. So ultimately, throughout I will show examples of certain situations, but ultimately the disciplined trader is something that, it takes a while, definitely takes time, and something that, I think everybody can strive to be even more disciplined in their approach on the day-to-day, myself included. So if you haven't already, please subscribe to the channel so I know I'm not making these videos for myself. If you would like the video, share it. When I post it on Twitter, drop a comment, let me know what you think about it. And if you have any video suggestions moving forward, please let me know. So just before we get started, I just want to go over a few key themes, that I'll be discussing throughout this video here. And first and foremost, use the disciplined trader as the overarching theme throughout. So here we go. The disciplined trader would trust their hard work in studying. The undisciplined trader will make 1,000 excuses for their shortcomings instead of looking in the mirror and realizing that they're probably the real problem. The disciplined trader is not following other people's trades, not looking for alerts. The disciplined trader has an understanding of price action and can identify areas where price could reject, reverse, etc. The disciplined trader has a refined trading model, one where the entry, stop loss, and take profit levels are clearly defined, and something, again, that they have an understanding as to why something might happen. So those are just, a couple themes that I want to talk about throughout this. But first and foremost, I think a lot of the discipline issues traders deal with come from not really understanding what they're doing. And that's not a knock by any means. Some people might be further along than others, and I totally get that. But a lot of people, press buttons without really having an idea of, where price might go, or even to kind of extrapolate on that, where their trade might be a loser, where it's no longer valid, that setup that they initially took. And I think that leads to that lack of discipline when you're kind of afraid to just, take profit on the trade. You're up nice, you're at a position where things might reject. This might be a good spot for you to take your profits, or vice versa. This might be a good time just to concede, take the loss on the trade, and move forward with yourself and your day. But that ultimately comes back to the overall understanding, and it comes down to your approach, right? I'm not telling anybody you should all trade like me. You should all use one model, one size fits all. That's not what I'm saying. But with whatever you're trading with, whether it's the concepts that I use, whether it's moving averages, RSI, MACD, trend lines, whatever it is, I think you just need to have an enhanced understanding as to why something might happen and why it might not happen. And ultimately, I think that's a very important thing to understand when it comes to trading. So, for example, in this situation, I took a trade within this setup here, but not necessarily this one right here. But just as an example, oh man, we had a resistance level here. Why would price have rejected at this point here? Well, if we look closer and we look to our left, we can see we have another bearish imbalance right here, right? So that's what I mean by having an understanding of where you might want to take profits, where something might not work anymore. If you, kind of take a look at my videos that I have on YouTube here, it's everything that I do. And this took time for me to develop, because at first, I really was not like this. And, I would have really big days, but I would also have really bad days. And to avoid that and to try and maintain a level of consistency, I needed that discipline. And, sometimes with discipline, you lose out on those monstrous plays. But ultimately, over time, I've seen that it is much more sustainable to be disciplined, not to be going for those outrageous gains when, if you can lock up 20 points, take the 20 points, come back later, look again if necessary. But, trying to overdo it and, potentially force something that's just not there, that's doesn't exhibit discipline whatsoever. So that would just be my first talking point. Just whatever your model might be, really have a good understanding of it. And, that can come through weeks of back testing. I used to think paper trading was a waste, but to me, paper trading is great. Yes, you're not going to have the emotions that come with trading live funds, but on the flip side of that, whether it's live funds or not, if you're working out a model, working at the kinks here and there, it really shouldn't matter if it's, paper or real money at that point, right? Also, if you're just continuously losing, what difference does it make if you're using real money or fake money at that point either? So finding a model, having a good understanding for it as to, what situations it might work, what situations it might not work, I think that's a huge plus to kind of have in your bag. So that would be my first point on discipline there. But the second would be, you're not going to want to sell at places you should be taking profits, and when you give back some, you're going to put yourself in a negative state, in addition to not selling places where the trade is a loss and then it kind of gets out of control. And again, this is something that dealt with many, many times in the past, and over the last year plus, gotten so much better at just getting out of a trade that's a loser. If something were to break a level that I identified prior to even entering the trade, it is a huge plus now that I trade futures on here on TradingView, and I can just place the stop loss on screen. But it takes a lot of the thought out of it when it stops. Yes, of course it sucks, but guess what? I fully understood that risk prior to even entering the trade, so I have to be okay with it. But when you get into a position where, let me see if I could cherry pick something. Maybe not here. This is a trade that I took on Thursday that I'll get to in a little bit. But, let's say you have a couple levels, maybe 20 points apart to the downside here, and you lose your first level and you say, oh, well, that happened kind of fast. We have another level down here. What if that's the bounce level and that's the one that makes the move higher? One, you're playing with fate at that point, right? You lost your level that you went into the trade with the idea that that was going to be the level to hold. Two, I call it getting caught in quicksand, because you just continue to get dragged, and then when this whatever level here gets melted through, then you say, oh wait, I got another one here. So you're just getting sucked more and more down, and your contract's going to take a pretty big hit, especially if you're trading options on a shorter time scale. That theta is going to eat you up, and then instead of fighting to make money, you're going to be fighting just to get back to break even, which is not the idea of trading for sure. So that's, to me, keeping the losses smaller, having them predetermined prior to even your entry. That'll save you a lot of headaches. So, again, the disciplined trader, say that 10 times fast, goes into a trade. He has the understanding of where the trade might fail, and he's not going to waver. He or she, I should say, they're not going to, kick the can on said level, and look for something lower as a potential bounce. They're going to take their loss and re-examine as price, moves forward. But, so that was another point. Let's see, what else do I got here? Oh, here we go. A huge negative in this space, and this is the trading space in general, in my opinion, is the idea of taking someone else's alerts. The person giving the alert can be an excellent trader. They could be awesome. They could be, whatever. They could give great alerts even, right? But if you don't know or understand the reasoning behind the trade, one of these days, odds are it's probably going to come back to bite you. Your risk management, what your account size is, might be much different than the person who is giving you that alert. And in that case, there also could be a little delay where they said, oh yeah, I stopped out of that. And you're sitting in this thing without having any idea or understanding of, oh, I should have been out by now. There's no hope here, and my contract is down 50, 70%, maybe even 100% at that point. So just, when it comes to the alerts, to me, it was never a sustainable thing, even with somebody who's Again, it could be a great trader, but there are a lot of variables that go into it. Say, that trader was on an incredible run, 10 for 10. They're just crushing trades left and right. And you decide you want to go in much heavier, with a much larger percentage of your account on the next trade. And that's the trade that breaks the mold. And guess what? Now you're out. You're going to have to wait to collect some more money so you can get back in. But that's just my take on the alerts. I don't believe in them. I think anybody who is willing to put in the time to get better at this thing can absolutely do so. And that's without alerts from somebody else. So that's my take on the alerts. And to me, a disciplined trader probably isn't going to take alerts from somebody else. But anyways, just as an example on how I would map out my trade, every time where I would define my risk prior to entry, again, that way, if things go bad, again, I'm in a good spot. I know where, again, things might go wrong, and from that point, I take the loss and I move on with my day. I know that the more times that I take a stop out, right, and whatever monetary number that my stop loss is at that point, it has to make sense for the potential reward. So I can essentially get stopped out 5 times in a row, and that 6th trade that I hit could, 1, erase all of those stops, and 2, maybe even potentially put me in the green from that, right? So that's why I always like to weigh the risk reward prior to entry, just so that it makes sense. But anyways, this is the trade that I took on Thursday, and it was right off that 10 o'clock. Of course, for anybody who watches any of my videos, 10 to 11 is the time slot that I love to trade in. I try to avoid the morning to avoid these wicks like that. But anyways, the trade really set up right in here in this vicinity, right? So also worth noting, this was the imbalance that I used. So this was a previous bearish imbalance, turned bullish, and this is the exact trade I took. So I had our swing low right here. I have my swing high right in that area, right off the green candle, I'm sorry. Right in here, you have pretty beautiful setup right here. So to me, here's our imbalance right at discount, right at 50%. I know a close below this 50% range. While could this trade still be valid? Yeah, it could. But if we look at this range, let's just look at the numbers on this right here. So for me, stop loss would be, or was, and I have a video of this if you want to check it out. It was inside this new week open gap underneath this 0.62 level. And again, my risk, I just wanted it to be managed and for the potential win to make sense. So at this point, I'm risking 10 points for a potential, swing high break right here at 1500. That's good for about 34 points. 34 points on NASDAQ's good for $780, and that's what I ended up coming away with. Could have been a little more. I was hoping that we would get this, and we didn't. So, you'll see that in the video when I plug it in. But, again, this is just the model to a T. So the swing range, took out a couple highs in the process over here. But here's the swing range. Here's our retracement back down into the discount of the range, or right 50% and below. Preferably, I like these imbalances much more. But again, there are times where I don't even get that opportunity. So taking it off of this inverse imbalance right here. So previously bearish, right? Down close candle. Here's your candle here, candle here. If you notice on both sides of this candle, none of this area is contested. Therefore, it's an imbalance to the downside, right? Price does get up into it, rejects off the first attempt, but the second time through, we do get that large candle up and through. That way, I would leave this on as a potential inverse, which played out pretty nicely for me in this situation right here. So, but again, stop loss well defined prior to the trade. You'll see it in the video. Take profit, swing high. I was aiming for this one, and obviously it was just short, but which stinks. But again, it's okay. I can manage the trade, and you'll also see in the video on how I'm moving my stops up progressively with the candle, so that I'm ensuring that, you know, this trade could really go bad and I will still be in profit and make something off of it at the very least. So so I'll plug that in right here, and then we'll kind of get back into it. So one sec. If you're looking for a market newsletter, check out mine, Markets with Mando. It's recently been featured on Benzinga, Webull, TOS. First month free using code August100. I'll put the link in the bio. All right, so back to it. We have our next talking point here. And the next phase of being a disciplined trader to me is having the patience to actually wait for a setup. There are times where I feel like I know where price is going to go. Oh, I can see a bounce here. Oh, this is a good spot for a potential rejection, right? But I backed off of those trades really unless it follows my specific model. This is a model that I've been back testing for so long at this point. I have a really good grasp of the ins and outs of it. Does it work 100% of the time? Absolutely not. If, again, you look at my video, you're going to see that for my model to be 100%, price has to move in one direction the entire time, and we all know that is just not the case, right? So there will be a shift in market structure at some point, and when that occurs, obviously, if I'm looking to take that trade, I would lose. But there are little caveats to it where I know if we're taking out a higher time frame level of liquidity, that might not be the time that I play my model, and you know, for that reason, I would avoid that trade. So ultimately, that is, you know, my model in a nutshell. But, you know, again, I backed off of them, and, you know, you could be right, and it's all good, right? You're happy you made money. But on the flip side of that, when you're wrong, you know, you're not only going to be annoyed that you lost in that trade, but you're also going to be annoyed that you took a trade that you probably shouldn't have, because, again, if you're working towards being a consistent, disciplined trader, you want consistency and even in your model at that. So if you can just develop a model that you can back test, it's repeatable, and it's something that you can understand inside and out, why not just take trades off of that criteria? To me, it makes just much more sense. And again, you know, if you're interested in looking at my model specifically, I have the videos up here. You can take a look at them. You know, one of them's pretty long, the other one's not too bad, but again, it's just me essentially walking through you know, every step of the way. And it was really until that point where I really locked down something that made a lot of sense to me before things really started to change for me. Because in the past, when I had multiple setups that I was trading, you know, I would have days that were crazy, I would make a ton, and then there were other days where I would lose a lot right back, because again, it was just that lack of discipline. I needed something much more structured, and having a model to me really helps keep it much more simple. So let's see, we got the next point here. All right, playing around with size can totally have a negative impact on your discipline. So again, I don't think this is a one-size-fits-all by any means, but if you're sweating out the trade, odds are you're probably you know, in too heavy. You know, have you ever lost a trade on the second opportunity or second trade idea that you might have, you kind of up the ante or buy more contracts in hopes that it works out and that you could dig out of that previous hole. That can kind of get dangerous, and that can put you on a spiral, not only short term, but it could take you out for a little bit if you're not working with too much in account size. Even mentally, that can be really damaging. So when it comes to sizing, I think it is really, really underrated to be in a situation where, again, you have the trade mapped out prior, you know what your potential loss could be, and from that point, does it make sense to take the trade? If it were to go wrong and go bad against you, are you going to live? Are you okay? Is it going to wipe you out completely? So avoiding those types of trades in terms of consistency, discipline, to me is paramount. So, and again, here's just my last point. I know I've been going on a little bit about this, but I think there are some key takeaways that you guys can bring from this point. Lastly here, we have, really this is the most important, but the ability to take a loss. One of my friends, this is nothing trading related either, but one of my friends a while ago, he made the comment, I don't know if it was in a movie or something like that, but he said the quote, even bosses take losses. And realistically, that's got to fit the trading game better than anything else. Because again, if you can't go into the trade and accept that there is a chance that you are going to lose on this trade, and you're gonna say, no way, it's gonna bounce on this next one. Nope, next one's gonna bounce. You're getting caught in quicksand, you're getting dragged under, and that's when problems start. If you can control those losses and mitigate them and not let them get out of hand, that is a much more sustainable thing you can do as a trader to kind of keep you in this game for quite some time. If you're in an area where, clearly things would change from that point, do you really want to play with that type of fire and refuse to respect your stop loss? Just as an example, how many times have you, trades of yours gotten out of control because you didn't respect that game plan? I can think of a couple 0 DTs that I've taken in the past that it was totally that, and your loss and what your expectation of the loss was, it just gets out of hand, and then by the end of it, your contract's worthless and you burned some money. Even if it's $100, if you're going to continuously do that, that's an extra $100 that you could have in your account, and you're just lighting it on fire. So again, I mentioned this before, but the way I look at it is, if I could take a few smaller losses along the way, one trade for me can make up for that plus some. So ultimately, I guess the thing you could take out from that is just, following your game plan, trusting your analysis. If you've put in a lot of time and effort into getting better as a trader, you should feel confident, and even when things go against you, it shouldn't be, my strategy stinks or something like that. It's not that. There are times where the market is fickle, things don't work out the way you had planned, and you really have to get better at accepting failure. It's a lot like baseball, where baseball, you get a hit 3 times out of 10, 300 batting average, you're probably an all-star, or if you do that over a long period of time, you're in the Hall of Fame. So you realistically could lose 70% of your trades and still make money in this, if your risk management is pretty dang good. But just to close, again, the title of this was The Disciplined Trader. That disciplined trader is one who can put in the time and effort to be successful, one who can map out his trade plan, win or lose, and follow it. So I hope this was helpful in any way. If it was, let me know. Put it on the comment or something like that. If you disagree with anything I say, feel free to shoot that under there as well. But that's what I got for this week. So again, we'll talk soon. Good luck in the upcoming trading week.